Right now, you probably hold your money in a bank account where it exists digitally. But what if some of your funds could live in an account managed by the Federal Reserve and you could access them with a digital wallet? This is the basic idea behind a digital dollar, and experts hope it will solve some of the problems with traditional banks. In today's video, we're going to discuss what exactly is a digital dollar and how it would work. So, without any further ado, let's get started. The banking system is experiencing an existential threat in the digital age, forcing it to innovate or face disruptions. In response, two groups in the US are now investigating how to build what is known as a central bank digital currency, a digital dollar to compete with private cryptocurrencies such as stablecoins, which are cryptocurrencies pegged to the US dollar for stabilize its value. One of the US CBDC projects is led by MIT and the Federal Reserve Bank of Boston, and the other by the Digital Dollar Foundations and Accenture. The MIT-led group is currently studying how CBDCs would work in theory and are experimenting with different types of technology that can allow federal government-backed digital currency systems to be secure, private, and scalable. Drawing inspirations from cryptocurrency research, MIT said it will work with central banks, leading companies, traders, regulators, academic researchers, and technologists over the next few years to devise a viable systems to route digital money. And Reuters reported in May that the Digital Dollar Foundations was launching a series of pilot programs together with financial companies, retailers, NGOs, and more to generate real-world data on the pitfalls and potentials of a digital dollar. If you are wondering what a digital dollar is and how it differs from money that exists digitally in the hands of any bank you use and how it could change the banking system, what exactly is a CBDC and how it is different from what we have now? CBDCs would be the digital representations of fiat currency, which is a strange term that refers to currency issued by the federal government, such as paper dollars that are pulled out of an ATM. It wouldn't completely replace all paper currencies, so you could still withdraw cash, but a portion of the reserve would be available digitally. In theory, you could access it through accounts held directly with the government, says David Andolfato, a senior economist at the Federal Reserve Bank of St. Louis. It is different from the way people access their money now, which is to withdraw it from a commercial bank such as Citibank. Who's interested and how far along are they? The Atlantic Council and Boston Consulting Group operate CBDC trackers that keep track of how far different countries are in the development and launch of their digital currencies. According to the Atlantic Council, 81 countries are exploring a CBDC. Of the 4 countries that have the largest central banks, the United States is the furthest behind in CBDC development compared to the European Central Bank, the Bank of Japan, and the Bank of England. The European Central Bank is launching a biennial investigations to determine how best to introduce the digital euro, the Associated Press reported in July. If it gets the green light at the end of the investigation, officials say it would take another 3 years to really develop the digital euro. The Bahamas was the first nation to introduce so-called sand dollar digital currencies into its economy, MarketWatch reported. The intention was to offer widespread financial services in places where there are no commercial banks or credit cards are not accepted, especially in areas where the physical infrastructure of financial institutions has been destroyed by hurricanes. How will CBDCs impact the financial system? Andolfato believes that both wholesale and retail CBDC models could be avoided by banks as they could squeeze their profits by competing directly with them for deposits. In fact, Denmark cancelled its CBDC project because it didn't want to compete with commercial banks. They could argue that this could affect their ability to lend to finance. That's not a good argument at all because it's not true, Andolfato says. They can get funding from other sources. Deposit financing is not the only way to finance lending. However, experts believe that the private sector specializes in some features, such as customer service management at the retail level, which may still be an attraction for many customers. Perhaps the Fed's CBDC, acting as a basic public option, regulates these big banks should they try to exploit us with interchangeable fees for traders, suggests Andolfato. In short, people fed up with commercial banks might try a different options. Whose idea was it anyway? MIT credits the Bank of England with the first central bank to seriously consider the potentials of digital currencies in a 2015 research agenda, asking in part, could central banks issue digital currencies, which would the impact on payments and settlement systems? Is the crypto technology behind Bitcoin transformative? According to Andolfato, what sparked interest among US regulators and lawmakers was Facebook's involvement. Novi, a subsidiary of Facebook, will offer Diem, which is a stable type of cryptocurrency. The value of cryptocurrencies like Bitcoin can fluctuate enormously due to supply and demand. Stablecoins link the liabilities of a financial institution to some underlying object, such as the US dollar. They provide some sort of consumer protections and are mainly used in cryptocurrency trading and decentralized finance. Tell us in the comment sections your views on this topic. Alright, that's it for today's video. If you like watching our content, please consider subscribing to our channel by clicking the subscribe button down below. Thanks for watching.